Palantir has been one of the best performing stocks this year, as it's up over 300% in 2024 alone. But I believe Palantir is currently overvalued, and in this video I'm going to explain why. Now before we dive into it, I just want to make one thing clear. Just because I think Palantir is overvalued doesn't mean that the stock's going to crash, as markets can remain irrational for a long time. Let's first start with the positive, which is Palantir's growth has been very impressive. If we look back in 2019, Palantir only did about $740 million in revenue, and if we look at the last 12 months, they've done about $2.6 billion. This is equal to about a 30% compound annual growth rate. They've also become net income positive, so they're no longer losing money. If we look in the past 12 months, they've reported about $476 million in net income, which is compared to a $579 million loss back in 2019. On top of that, in their Q3 earnings alone, they said they closed 104 new deals and that they secured a spot in the S&P 500. Here's where I think it's overvalued. At their current market cap and their current earnings, Palantir is currently trading at 362 times earnings. Even if you expect Palantir's earnings to grow very quickly, this kind of valuation doesn't really make any sense. We'll first start with their net income. If we look at their net income, about a third of their net income is created by interest, which means it wasn't created from the company operating, which means this isn't going to grow at the same rate as the business, obviously. But let's pretend that it is, right? Let's pretend that they're going to somehow be able to grow this kind of income at 40% a year, right? Let's make this assumption. So if we say that they grow at 40% a year for the next 5 years, by the 5th year, they would earn a net income about $2.5 billion. But even with that kind of earnings, they would still be trading at 62 times earnings. 64 times earnings. That means even if they grow at 40% a year and grow the interest income at the same time at 40% a year, for 5 years, they would be trading at 64 times earnings. That doesn't really make any sense. And if we look at the insiders have all been selling, and nobody has bought any stock in the past month. So, to me, it looks like this company is incredibly overvalued. Curious to hear your thoughts, and if you enjoyed this video, please make sure to leave a like.